Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today's Thursday. It's July 13th. I can't believe July is almost halfway over. It's about 7:49. The market's going to gear up to open up in about an hour and 41 minutes to be specific with you. Now, before I begin, a few things. For the summer, I've opened up my VIP room. Now, today is Thursday, and Thursday, because there's a lot of news on Thursday, like jobless claims, I like to do my VIP room early. I've opened it up for free, no cost, link above or below this video, whether you're watching it on the Wealth Press channel or the YouTube Wealth Press channel or the Wealth Press website or the Roger Scott website. You should have a link above or below this video. Please feel free to attend 10 a.m. Eastern Time today. Do not miss out. It'll be a great report because we'll cover the PPI and all of the things that this video covers. It's like the second part of this video, except it's live. Also, subscribe to our Telegram channel. Go to rogerscott.com/Telegram, or there's a link below the YouTube Wealth Press channel. Now, let's get into all of this. What are we waiting for? I don't want to waste your time. Nasdaq is up pretty big right now. The Dow's up 71 points. The reason why the market is up so high is because yesterday's CPI data, which came in line with expectations, basically showed that that what the Fed is doing is helping, and that inflation is moving aside. It's moving lower. You could see here all the numbers were lower. The food and energy, they were expecting 5. They got 4.8. Year over year on the annual, on the big headline number. And I only look at annual. I don't look at month over month. But every number was lower. Now today, that means that investors are getting excited because they think that these numbers mean that the Fed is going to stop raising rates. But that's not what the Fed is saying. That's not even close to what they're saying. And so the market and the Fed are in a major disagreement. Now today, we're going to have the PPI. It's not as impactful, but they're looking for the number to be year over year minus food and energy exactly what it was last time. So if the number is a little lower, the market will gain a pretty good rally. The headline year over year is anything below 1%. Anything below 1% it will work. And X food and energy, which is what I'm looking at, they're looking at anything at 2.8 or lower. This is the headline number here, and that's what we're really waiting for. And that's what's coming out in about 39 minutes to be specific with you. So keep your eye on that number. It'll either validate the current market action or invalidate it. Now, on top of this, today is the official day of earnings season. That's right. And let me just kind of show you what's on the table. I made a document earlier this week, but I wanted to kind of go over it with you right now so you see exactly what's going on here. Here we go. Earnings. So today, you've got Pepsi Cola ahead of the open. Let's take a quick look and see how Pepsi's doing, right? Let's see. Let's see how it's going to open up. Ooh, it's going to open up really good. This is good for consumer staples. Pepsi's opening up almost 3%. This is very, very good for consumer staples. So they obviously beat expectations. And Delta's coming out also ahead of the openings. Let's look at Delta. Maybe that's one of the reasons why the market is reacting this way. It'll be great for airline stocks. Yep, up almost 5%. Both stocks obviously have beat earnings expectations. Now, you've also got Conagra, Progressive, and tomorrow we got the bank stocks coming out. So today's going to be a really important day because you've got non-technology stocks doing really well, beating earnings by a pretty good shot. They're both up about 5% pre-open, as we just saw right now. And we have the PPI, which is riding off of the wind off of yesterday's CPI report. Now, I want to warn you and show you something important. I don't want to be the wet blanket in the room, but I want to show you something interesting. The Russell 2000 right now, if you look at the Russell 2000, and here it is, it's worth looking at. You'll see that it's finally breaking above this congestion, this consolidation, which we've had for a very long time. Now, I like what I'm seeing, and typically I would say this is a breakout and this is meaningful, but the truth of the matter is I really want to see the Russell above this level right here. Because once it moves, it's going to move, and I want to see it outperform all other indexes. Right now, it looks like a sympathy play because it's coming off of the lows, and it still has to overcome the 200 level to really rally. More importantly, and this is really, really important, if you look at momentum levels on the Russell, look at where we're at right now. And this is above the 50-day line. So yeah, we can huff and puff and go up here, but in the last 10 years, we've gone above the current levels. Let me just show you how many times. One time, two, three, four, five, six, seven, 8 times. 8 times in the last 10 years. So we're clearly overbought right now. And I personally don't think we're ready for a breakout, especially in light of earnings. And I don't think these earnings for technology are going to be as good. Also, if you look at ARK Fund, look at Kathy. This is the degenerate fund. This should rally faster because this has more hyper-focused stocks. The Russell 2000 has a lot of little baby stocks, $5 stocks, $3 stocks, stocks that are, it's an index, right? It's not a fund. This lady, she picks, let me show you the kind of stocks she picks. I called this the degenerate fund. These are like the running, where is the statistics here? Let me see if I could find the constituents for you. I can't find the constituents. That's really weird. Anyways, she's got every possible stock that is very, very speculative, like really Nasdaq 100 very speculative stocks, the ones that should rise when the market is hyper bullish. And if you look at her, I mean, look at this. This looks like a real rally. But if you look at it over time, we're not at the upper end of this channel. And you might or may not have remembered Uncle Roger telling you over a year ago that we're going to bottom out and nothing good's going to happen until we take out this channel. We're not there yet. And I think by the time we get to this channel, the rally is going to fizzle out in the large caps. Now, I know I'm thinking 2 steps ahead, but that's what my job is. But based on the momentum levels that I'm seeing right here, and also Nasdaq 100, look at where we're at right now. We're finally there. In the last 20 years, not 20 years, but 15, we started tracking this in 2007, so it's about 15 years. So look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It happens about once a year, and we're there right now. And remember, we've gained quite a bit. So unless earnings are absolutely magical this quarter, and I mean really, really magical, basically what I'm trying to say is everything has to line up. Look at the S&P 500. It looks like it's about, the algos look like they're hitting it hard, and it's overbought. It doesn't look like we have a lot of momentum from these levels. Now, we can consolidate and continue going higher, which would bring momentum levels down and this back up, but I'm not seeing it, especially this time of year when we're smack middle of summer, and all the AI and tech stocks have already risen way above any potential impact of their earnings because of the whole AI boom. So I would say be very, very careful now. The bond market, I still think, has more upside to go. It was up over a point. It's up 41 ticks right now. I think we may be able to see 103, maybe 104 level. So this is a pretty good pivot. But in terms of the stock market, I'm getting really, really nervous right now because the small caps also appear to be breaking out in the short term. But when you look at it on a longer term basis, they still got quite a while to go, especially the Cathie Woods stocks. As I said, the degenerate index. So be really, really cautious and be really careful. I would start getting excited about small caps, which would lead the market higher once we get past this level right here. And by the way, I've been saying this for ages now. I would call this the, let me change this color here. We'll call this the bullish green zone right here. So we want to go above the 70 level, say the 70-ish level on the Russell. We want to go above the 200 level on the, that was the, not Russell, that was the ARK fund. We want to go above the 200 level on the Russell 2000. And on the Nasdaq, I honestly think this is just way, way too much. This is the equal weighted Nasdaq. Now, one thing that's good and beneficial, you're not seeing as much of a rally in just those 7 stocks. You're seeing a broad market rally in the Nasdaq, which is very, very positive. Meanwhile, the 7 stocks, I think, are starting to peak out. They're not able to go much higher than these levels, and we are overbought. So be very, very cautious with the large Nasdaq, the top 7, the Nvidia, the Microsoft, the Apple. Be careful with those. But it looks like we're starting to get a little bit of an upside move in the small cap stocks, which is really, really good. But again, unless we go above these levels, the 200 in the Russell and the 70 in the ARK, I don't think anything good is going to happen. Let's talk a little bit about global economy and see what we can expect today aside from earnings on Pepsi, Fastenal, Delta, Conagra, and CTAS. Let's look at CTAS, see how it's doing. Let's take a quick look here. Look at that. Everything is up nicely today. I like this. I guess earnings are starting out on the right foot, but we got to keep an eye on the PPI. The PPI is going to be very important. I'll kind of quickly go through this with you. So yesterday's report showed that the Fed may be closing in on their interest rate hikes. The problem is that's not what they're saying. That's what the market is saying, but that's not what they're saying. And the economy is certainly not showing that. S&P rose to a 14-month high. Bear market? What bear market? Blue chips posted a 3.5-week high. The tech-heavy Nasdaq, 17-month high. A bunch of stocks had good news. I don't want to read this to you. I just want to go over the important stuff. Now, here's the good stuff. Richmond Fed President Barkin said, the central bank's commitment to achieving its 2% inflation target, emphasizing that despite a slowdown in June, the growth in U.S. consumer prices are still considered too rapid. Inflation is too high. If you back off too soon, inflation comes back strong, which is my point. Which then requires the Fed to do even more. Yeah, he should have said that to Powell earlier, so he started raising rates 6 months earlier than now. Anyways, I don't want to get into all that. He also said, Kashkari stated that banks must be prepared for higher interest rates if policymakers find it necessary to raise rates further to tackle entrenched inflation. That doesn't sound like things are on the starting to come up. 92% chance of a 0.25 basis point rate hike, which means it's pretty much baked in. And I'm not seeing it gyrate like I did last time. I mean, they're going to raise rates this time. Positive news so far from what I could figure from the morning report on Pepsi and Delta Airlines. And as I said, all eyes are focused on the PPI. And we are looking at jobless claims, as long as they're below 300,000, 250, 240, I'm good. I'm looking at year over year to be at 2.8 or lower, preferably 2.7. It would be kind of messy if some of the numbers came out better than expected. It would be kind of nice and clean if both the PPI and the CPI beat expectations. Here's what we're looking at, 2.8 or better. Also, initial jobless claims, I'm looking at, as long as it's around 250, 260, 230, 240, even 270, it's okay. As long as it doesn't creep above 300 fast, and it doesn't seem to be doing so. In Europe, they're keying off of the U.S., for the fifth straight day's consumer inflation data sparked optimism that the Federal Reserve is approaching the end of its rate hike cycle. Gains in tech and mining stocks are leading the overall market higher. China closed higher after state-run media outlets reported that the government was contemplating additional stimulus. Yay! In the forthcoming months. That's going to boost the U.S. economy. Anything that helps China is going to help U.S. While indications of easing regulatory pressures, they don't need a fight right now. This is not a time for a fight, folks. This is the time for the world to be together and strengthen global economy. Then go fighting after we're not in a recessionary environment. Easing regulatory pressure on the country's technology giants, which lifted sentiment. Nikkei, that Nikkei, they posted the biggest gain in 2 weeks. Triggered by heavyweight chip-related stocks after softened than expected U.S. inflation data reinforced bets on less hawkish Federal Reserve this year. Not so sure. Carvana fell after they were upgraded yesterday. They were downgraded. What a slap in the face. VSAT plunged 19%. They had unexpected event occur during reflectory deployment. I don't even know. Satellites, okay. And again, big news on Pepsi, positive earnings, CTAS, Cintas positive earnings, Delta positive earnings. Let me look at Conagra. Let's look at Conagra. This could be really good for consumer staples. Nope, they're down. Well, but I don't know if they're reporting before or after the opening bell. But the point is, watch out for Progressive, Fastenal, Conagra, Pepsi, and Dell. And I'll talk about that in my VIP room today. I think bond markets have a little bit more upside to go. And keep your eye on ARK, especially the 70 level. Well, at first we got to keep an eye on the 55 level, and on the Russell, the 200 level. I think this is algos hitting it up. I'll talk about tomorrow exactly what the algos have been up to this week. But it's very positive that the smaller stocks are starting to rally. That's a really good sign. The problem is the large caps could falter during earnings, which would undo a lot of what we've seen this quarter. Man, I've talked a lot. Now, folks, I've got something big for you. My new data mining software, yes, my new data mining software has been stacking up wins on stealth stocks like crazy. Like on T-Mobile, a brand new patent-pending software predicted a crash during the first week of June. Sure enough, what did T-Mobile do? It fell faster than a ton of bricks off of the Empire State Building. That's right. That's true. And my exclusive group of 92 people 92 beta testers. They made out like bandits. They made out better than all of us put together. I mean, they killed it. 167% on T-Mobile from Robert. Mike says, I had an average cost in T-Mobile of $2.88. Got out at $10. Great pick, Roger. Wow. Steven, 235%. Dom, 362%. Congrats, Dom. And today, you're in luck. Why? Because my patent-pending software just flashed a new stealth stock set to surge during the middle of July. That's right. I want to rush it to you ASAP. Follow the link below. Get all the details, learn the free training, and the free trading, because I give you lots of red meat trades. I literally, during the session, tell you when it's the right time to buy at least 5 stocks that have been doing the same thing 10, 20, 25 years in a row. You don't want to miss it. Follow the link, watch the free training, and hopefully you'll be able to identify stocks like Robert and Steven and Dom. See this t-shirt? Winning. That's the side you want to be in. Remember, join my Telegram group, rogerscott.com/Telegram. You can subscribe there and follow and like these videos. I respond to your questions.